Well, good evening, everyone. Welcome to Women in Money Mondays, Part 2, if you can believe that. I'm Dylan Ryder from the Johnson County Library's Career and Finance Committee. We have the privilege to be joined by Lee Modisett from the Kansas Department of Insurance, who will be sharing information about the importance of insurance and the different types of coverage that you'll come across. But first, real quick, I'd like to run some polls by you. So these few poll questions here, if you could please share with us how you came across this program, as well as your home zip code. That information is a huge help to us in terms of marketing, planning, and knowing whom all we're helping. While you're answering those poll questions, I'd like to offer you a quick tour of the different windows you'll see on your screen. To your left, you'll see the Johnson County Library logo, which contains a link to the JCL website. You also have a presenter video screen where I live right now, and then a Q&A module, which you can use to add your program-related questions. In the center, that'll be the presentation area, which will contain presentation slides, these poll questions, and results. And then to the right, you'll see presenter biographical info and credentials, a resource list, which will contain websites referenced in the program, and other helpful information for you to bookmark and review following the presentation. Now, this is a customizable interface, so if you would prefer fewer active windows on your screen or would like to alter the size of any of the windows, simply use the controls in the upper right of that window or the resizing option on the bottom or right side of that window. If you've closed a module and wish to see it again, just click on the applicable button located in the bottom center of your screen. Also, if something, say, on the left of the screen, but you want it on the right, just drag it and drop it wherever's most comfortable for you. Finally, if any of you are still hearing that lobby music, simply refresh this web page. If that problem or any other pops up, just click the help icon or submit a question in the Q&A. And feel free to participate in our discussion by using that Q&A module to add your comments and questions. Lee will address select questions as time allows following his presentation. The contents of this program will be recorded for future viewing. Now I'd like to turn things over to JCL's Careers and Personal Finance Librarian, Marty Johannes. Good evening, Marty.
Hello, Dylan. And thank you all for joining us for the second Women in Money Mondays to hear Lee Modisett share his expertise on insurance. The Women in Money series was developed by Housing and Credit Counseling, Inc. Johnson County Library began partnering with HCCI in 2014 to make this series available to our patrons each year in the fall. And this year, recognizing that men and women alike could benefit from this information, especially during these challenging times, we decided to make the series inclusive to all and to rebrand it with a fancy new logo. Due to COVID-19, the entire series is being offered online. And one silver lining of this is that the pandemic preventing us from meeting in person and forcing us to go virtual, we're able to expand our reach beyond our metro area. And we're also able to make the recordings of the online programs available to those who aren't able to join us live. This program, as I mentioned, is the second of 9 programs in the Women in Money Mondays series. To see a full schedule and to register for the individual programs, go to the Johnson County Library website at jocolibrary.org. And now I'm going to turn it over to Marilyn Stanley, the Executive Director of HCCI, to say a few words.
Thank you so much. Thank you so much, Marty. Well, so first of all, Housing and Credit Counseling, Inc. is a nonprofit HUD-approved housing counseling agency, and our mission is to counsel and educate all people to achieve their housing and financial goals. One piece of that is insurance, and that's why we're so happy to have Lee talk today. Please do know that you're able to have a free one-on-one financial counseling session Basically, there's our website and our toll-free number so that you can schedule that. We've got appointments available sometime in the next few days, so if you want to call as soon as you can, even if it's just for a financial checkup. So with our mission being education, this program fits well. So we have invested our time and energy for programs like Women and Money each year, as Marty stated. Next, I'd like to thank our sponsors, the Kansas Securities Commissioner and Kansas Department of Insurance offices, and then, of course, the Office of the State Bank Commissioner to support these webinars through generous grants. We absolutely cannot provide these services without them. Try to change lives and provide information every single day. So now I have the privilege of introducing you to our presenter, Lee Modesett, Director of Government Affairs for the Kansas Department of Insurance. So Lee received his undergraduate degree in political science from Kansas State University and his Master's of Arts in Public Policy Analysis from Liberty University in Lynchburg, Virginia. Lee served nearly 5 years in the Topeka office, of Congresswoman Lynn Jenkins prior to joining the Department of Insurance staff in January of 2019. So please join me in welcoming Lee. Thank you.
Thank you, Marilyn, for having me. Thanks for all those who are tuning in. Appreciate you joining in this virtual environment. You may not be able to tell, but I am wearing a red quarter zip because I'm a big Chiefs fan. If I, in the middle of this presentation, have my mic and video drop off, it's not an internet connection. It's because I'm yelling about something going on in the background. But I do appreciate you guys having me here. And taking time out of your day and out of your evening to hopefully learn a little bit more about insurance. We're going to discuss why insurance is a must-have expense. And if you work at the insurance department, you have to love insurance. A little reference there to one of my all-time favorite Christmas movies with three little ones at home. Of course, we watch Elf throughout the year, but insurance is indeed my favorite. So I thought I'd start with what is insurance? A number of times we get calls in the office where folks maybe think insurance is a piggy bank, where if you've paid premiums, you should be able to get money back no matter what the coverage is or no matter what the loss is. But there's actually a definition of what is insurance, and it's defined as coverage by contract, where one party undertakes the risk to guarantee against loss to another party. It is one tool. This is a key component to keep in mind. It's just one tool available in your toolbox to help you reduce your financial risk. And as I mentioned a second ago, it is not an insurance, or it's not a savings account. So it's not money that you just put away for a rainy day. There's different ways to do that. Insurance is there to really help you cover against major loss. Key terms to remember: premium, the amount of money you pay, typically, again, monthly, for your insurance policy. Deductible will be the amount of money you pay before your insurance company kicks in, their share of expenses. And then policy riders would be any additional provisions to the base insurance policy. Typically will be adding coverages, but can also exclude coverages. We'll talk more about that here in a little bit. We'll start with auto insurance. So these are just the minimum coverages required by law in the state of Kansas. I won't read them to you. They're all right there on the screen, but keep in mind these are only the minimum statutory requirements to be able to have auto insurance in Kansas. Of course, it's always recommended and advised that you look at your particular circumstance and determine what above those minimum thresholds that would be a good fit for you and your circumstance. But if you're going to be driving the car in the state of Kansas, this is the minimum threshold that you would have to meet to be able to get your car tagged and legally and lawfully driving on the road. One issue I wanted to talk about in particular is personal injury protection, PIP, or no fault. You can see there on the screen kind of the quick summary of what the coverages are and what the limits on that are. Something that we see quite a bit at the department is a confusion about what does Kansas being a no-fault state mean. It doesn't mean that you don't have any liability. It's simply referring to medical expenses, rehabilitation, funeral, lost wages, home assistance for you and your passengers in an accident, regardless of who is at fault. A lot of times we have folks who say, oh, well, I have to pay for my claim and the other driver has to pay for theirs because Kansas is a no-fault state. But that may not actually be the case. It's entirely possible that one party or the other is responsible for the actual accident and damages. Again, keep in mind that no fault is referring specifically to personal injury protection. The other thing to keep in mind here is, as I mentioned a couple of slides ago, those are just the minimum coverage options. There are additional coverages available in Kansas throughout the country to meet your specific needs. Collision provides coverage for the repairs or the actual cash value of your own vehicle if you're in a motor vehicle collision or rollover. So the minimum threshold is going to be just if we'll cover the other party's damages. Collision will help cover your own cost of damages. So as you think about your budgets and trying to prioritize how much coverage do you want. One thing to keep in mind is if you were in an accident and your vehicle is maybe the only vehicle in the family, things like that, how important it might be to actually be able to make those repairs in the unfortunate event that you were to be in some sort of accident that were to damage your vehicle beyond the ability to get to work, because that creates whole new stresses in your life. And so I know it's really easy at times when we're all crunched for budgets to think about how can I cut those costs as much as possible. But the last thing you want to have happen is to get yourself in an accident and then not be able to repair your own vehicle. Another coverage option is comprehensive, sometimes, as it says here, referred to other than collision. So this will cover all the other sorts of things. So your car is stolen, for some reason it were to catch on fire, giant hailstorm comes through, windstorm blows and knocks a tree down, those sorts of coverages. Obviously, those are good to have if you can fit them within your budget. But barring a fire or a tree falling on it, you're more likely to need that collision. Again, if the vehicle is a single vehicle and it's one of the most important abilities to get to your job. Neither of these are required by state law. Again, I referenced earlier the minimums. However, it's highly likely that if you have a loan for your vehicle, that your lender will require those for obvious reasons in the event that you're in an accident and can't afford to maintain your coverage. They'll want to make sure that they have some ability to get their investment back. Other services that can be included would be a rental vehicle or personal umbrella policy. Those are pretty common depending on your job or depending on what sort of community involvement you have. If there are instances in which you have individual risk, you may want to consider adding a personal umbrella policy to your auto policy, again, to try to make sure that you're protected in as many circumstances as your budget will reasonably allow. I am going through these a little quick, I realize that, but I like to try to save time for question and answer in case anybody has any specific questions. This is kind of a Insurance 101 coverage of these, because I find that oftentimes here in the department, what we will have is kind of a misunderstanding of some of the fundamentals of insurance. So I'm covering the Insurance 101 component, but as we get through this, if you have more questions, feel free to submit those. And I know we have time at the end, so I do want to make sure that I get to your specific questions and concerns. One thing I did want to cover on the auto side as well is what to do if you're in an accident. First, you obviously want to contact the police department. Second, you want to make sure that you get the other driver's information and their insurance information if they have it available. Everybody, it seems like, has a smartphone or some sort of camera in their pocket these days. Make sure that you get photos, and if there's anybody else around, make sure that you get witness information. If you, depending on your auto carrier, they may actually even have a Report It app for you to be able to use to take photos at the scene of the accident and upload directly. That helps for a couple of reasons. One, that obviously assists with reporting the accident, but two, that helps make sure that you've done your responsibility and logged important information to help that claims process. Couple of things on that claims process to keep in mind is you should notify your insurance company as soon as practical, and notify the other party's insurance company if you believe the other party is liable. Companies by law do have 30 days from the date of your notice, which is a key distinction. So if you're in an accident on a Friday, but you don't contact them till Monday or Tuesday the following week, their 30 days starts from the date of contact, not the date of the accident. And the other key is to make sure that you cooperate with your insurance company. For any of you that haven't been in an accident, certainly that's a fortunate thing. I've had the displeasure of being in an accident before, and you'll talk to your own insurance company multiple times. You'll likely talk to the other driver's insurance company multiple times. It can get incredibly frustrating because they're recording the phone calls, and you feel like you're giving the same story over and over and over again. And at some point, I think it's natural to say, hey, can we just get this done and move on? But that process is there for a reason. Getting angry at either carrier is not going to expedite that process. Calling us early in that process and being upset about the number of times you've been contacted isn't going to help that along either. We do have a way to file complaints with us if you believe that your claim is not being adjudicated correctly or handled appropriately. And I'll talk more about that in a little bit. But the key is make sure that you're cooperating both with your carrier and with the other insured's carrier. That will make that process go as quickly as reasonably possible. So that's kind of a quick summary of auto insurance. I want to talk next about home and renters. As I mentioned at the start, I am a big Chiefs fan. There's a nice picture of Arrowhead Stadium pre-COVID, full of 70,000 plus fans, and good old American flag there on the field. Hopefully the defense tonight does a good job protecting the end zone. And tonight we will also be talking about how do you protect your house and your belongings and your family. So we'll start with the homeowner side. For most, this will be the single largest investment that you will make. I still dabble in real estate every once in a while, and it's usually for most Kansans, as I said, a pretty significant investment. It's also easy to because it's such a large investment. Insurance can be expensive, and it's easy to want to look for maximizing your savings as opposed to making sure that you have adequate coverage. So the key you want to remember when you're shopping for homeowners insurance, if you're shopping around, is what's the best coverage options that you can reasonably afford within your budget. I understand that it's frustrating, to spend $1,000 to $2,000 a year, depending on size of property, or maybe even more, for an insurance plan, knowing that the chances of you ever having to rebuild your house are pretty slim, and knowing that the number of incidents that will require a claim are likely slim. That doesn't change the fact that the whole idea of insurance is making sure that you have that coverage in the event that happens. I ran into this myself 2 years ago. I live in Manhattan, and we had incredible amount of rainfall, and I did not have flood coverage on my property. I don't live in a floodplain, and the groundwater, or the water table rose significantly, and I ended up with water in my basement. Not only I had the sewer pump, the sewer backup rider on my policy, but the water in my basement was not a result of any sort of mechanical failure with the property. It was because I didn't have, it was a result of water coming up from the ground, and I didn't have flood insurance, which is what would have covered that. Fortunately for me, I'm a fairly handy individual, so I was able to repair the damage to my basement for a few $100s, but the quotes that I got to decide if I wanted to go through that work myself were in the multiple thousands of dollars. And so that's something to keep in mind as you think about the property you have and the potential risk to your property of understanding in the event of an incident, what sort of expenses would you have. Here are your coverage options. Again, these are just kind of a high-level overview. I'm always going to encourage you to sit down with your insurance agent and talk about your specific property and your specific needs. But the first option is obviously going to be to cover the physical house. So that's going to cover the residence and any attached structures. So if you have a garage that's attached, that's going to be covered under the dwelling policy. It'll also cover all the stuff inside the house from a mechanical operation standpoint. So that's your plumbing, heating, air conditioning, wiring, all of those sorts of things. It's not going to cover any of your personal belongings. That's actually going to be covered by contents, and contents is going to include your furniture, appliances that aren't attached, clothing, and any other sorts of things that you have inside your property that belong to you. It's going to be important that you have a home inventory, whether you document all of that with the old school photos that you print out at Walgreens or any other photo printing shop, or if you have a smartphone, there's a number of free apps that you can download for home inventory. Having an inventory of the items in your property will make the claims process, in the event that you were to have a claim, go much faster. If somebody breaks into your house and steals family heirlooms or anything of value to you, if you don't have any sort of documentation that was at one point in time in your possession, you're going to have to try to find receipts or other ways to verify that that particular property that you're claiming was stolen was in fact in your possession. Obviously, an insurance company wants to make sure that no one's committing insurance fraud by filing false claims. So it's really important to have some sort of documentation. If you are going to do the paper and photo route, that's certainly well within your prerogative, and that's better than nothing. Obviously, one drawback to that is if your house catches fire, that could be a problem. And so you want to make sure that you have a firebox or some sort of other protective safe that you can put those items in. Because just keeping it in a regular shoebox or Rubbermaid tote obviously is not going to work in the event of a whole house fire. So keep in mind some sort of way to protect that. You can obviously keep it offsite as well, and say a safe deposit box or any sort of similar option, but those add cost on a monthly or yearly basis. So a firebox is relatively inexpensive. You can pick them up at most stores and keep your safe documents, birth certificates, all of those good things inside that box. And then the other thing that you want to make sure is if you have any sort of detached structure. So again, I'll use my own property as an example. We added a small little lawn shed this year, and I made sure that I contacted my insurance company and said, "Hey, I've put some new siding on the front of the house, and I've added this shed. I want to make sure that I've got adequate coverage for those." They came back and said, "Hey, your policy actually already has up to X amount in coverage for these sorts of things," and so I didn't need to make any changes, but I did make sure that they were aware that I had improved the property. The other thing to keep in mind as you try to budget and prepare for an unfortunate event is that it's one thing to cover the structure and to cover the contents in the structure, but in the event that your house were to be destroyed, in Kansas, you're likely looking at either fire or tornado, obviously. I don't think we have to worry about too many hurricanes here. You want to make sure that you have a way to pay for living somewhere else in the event that your home is not safe to occupy, because that can, nothing's worse than dealing with how am I going to pay for rent when I already have a house that I have a mortgage on, and we're trying to put our whole life back together. That's enough stress in and of itself. And you don't want to have this compounded on top of it by not making sure that you have some sort of coverage to at least try to reduce that burden to you financially. This was something my folks went through back in '07. I'm from Southeast Kansas originally, and we hit the 100-year flood mark. A levee broke and flooded out our whole basement and a few feet upstairs, and we had to live outside of our home for close to 6 months, I think it was. And fortunately, my grandparents lived in town, so we were able to stay with them. But, having, there's a lot of added expenses. You certainly don't have a kitchen when you're out trying to, put the house back together. And so you have food and all of those sorts of things. So understanding that where your coverage gaps are, and again, prioritizing what you think may happen in life with what you can afford to cover. Because we all have budget constraints, we all have financial considerations, and you don't want to be in a situation where you're insurance rich and cash poor, but you also don't want to be in a situation where in the event of having a major catastrophe that you essentially have no real coverage at the end of the day. Let's see here, move this. A couple of other things to keep in mind. Sorry, my screen is giving me fits. As I mentioned earlier, the better your coverage, the less likely you'll have to pay out of pocket if disaster strikes. This is true not just in not just in homeowners insurance, but insurance in general. It's again easy to get caught up in. I want to spend as little as possible on my insurance, which is certainly an understandable frame of mind, but you need to understand what you're getting for that coverage. And as I mentioned earlier with auto, getting that umbrella policy or that personal liability protection, that's always a good idea to have added onto your policy. On the homeowner side, it's often a good idea if you're going to have a trampoline or have a pool, or if it's common to have friends and family over. You never know what sort of unforeseen accident would take place. And the last thing you want to have happen is some neighbor kid come over, even when you're not home, and hurt themselves, and then have a massive lawsuit on your hands, when for a relatively small amount of money you can protect yourself against those sorts of incidences. Some important things to understand as you're evaluating how much insurance do you want and how much insurance can you afford. Some of the keys that folks get hung up on are replacement cost versus actual cash value. So replacement cost is obviously going to be the amount of money that it takes today, if the incident were to take place today, to either replace that or to rebuild. So it's not uncommon that if you buy a house for, say, $75,000, to actually rebuild that house in today's dollars may cost $150,000. So you wouldn't want to have actual cash value in that situation if you were to have a total loss, because you couldn't build your whole house back if you lost it, if you were only getting the actual value. This is true of any number of structures, or if you have any sort of items of significant value that have sentimental value, or whatever the case may be. If it's old, it may be depreciated in the insurance policy's eyes, even though the product itself may actually have far greater value because it's a collectible or whatever the case may be. We've ran into instances where we've had consumers have an item of significant value, but because it was old, it was depreciated. Another area that you see this will be in roofs. We live in Kansas, hailstorms, windstorms, not uncommon to have any sort of damage to your roof. And this is where you can get hung up pretty quickly if you have actual cash value versus replacement cost, because the shingle itself can be depreciated out relatively in short order, and it can be expensive to replace your roof. So that's something to keep in mind as you're evaluating your budget and what you can afford or what sort of incidences that you're worried about. I know this event's taking place in Johnson County, but anybody across the state or theoretically, I guess, across the world could be watching this. So think about, where you live, what sort of accidents or incidences have taken place in your neighborhood or in your community, and think about if that were to happen to you, how much of that could you afford to pay out of pocket versus how important is it to have insurance for those sorts of catastrophic events. And as I mentioned earlier, make sure you have a home inventory, whether it's fire or water or tornado that were to cause significant damage to your house. You want to make sure that you can prove that what you said was inside was indeed inside. Some additional insurance that is not covered under your standard homeowners policy. I mentioned earlier my folks went through a flood. They were in the 100-year flood mark. They had flood insurance, but they did not realize that flood insurance did not cover the contents in the house. So mentioning earlier, making sure that you understand what's covered in your policy. Even my own folks had a misunderstanding of what was included. So it's good to take this information that you're hopefully learning from this evening and ask these sorts of questions from your agent. Think about what happens if sort of questions and really understand what is or isn't in your policy. Obviously, a lot of these policies or all of these policies are written by attorneys. Don't expect everybody to be an attorney and be able to read the legal language, but you do need to understand what is in those policies and what is and is not covered. Flood insurance is one where, depending on where you live, you can get caught up. Earthquake insurance, not a lot of earthquakes of any significant proportion anyway happening in Kansas, but certainly there are fault lines and opportunities for earthquakes in Kansas. So understand what is or is not covered if an earthquake were to happen. And sewer backup or mechanical failure, as I mentioned earlier with my own house. This is different than flood insurance. Most common, you're going to see this in basements where there's a sump pump typically. Certainly, if you have a slab house, you could still have a sewer backup, whether that's tree roots in the line or if for some reason toilets were to quit working and flood your half of your house. You want to make sure that if you're concerned about that sort of incident, that coverage is on there. In many cases, it's not terribly expensive to add that as an additional rider to your policy. I know in talking to my own insurance agent, they mentioned that they kind of add it as standard language because those sorts of events can be $10,000, $12,000, $15,000 in damage to a property. And again, they're relatively inexpensive in the totality of your monthly insurance premium. If you're struggling for every single dollar to be able to afford having coverage on your property, this may be something that you think you can live without. Those are decisions for you to make with your budget and your agent. But I would definitely encourage you to make sure that you've at least thought about this and understand what the costs to you are if you are looking to save money and evaluate what's the best return or what's the best protection and likelihood of these sorts of events. I spent about a decade doing property management. I can tell you that we see sewer backups or pipe breaks far more often than we've ever seen a house catch on fire. So not to kind of harp on that particular point, but having that sort of coverage protection in many cases is a good idea and would strongly encourage you to consider it. We're going to transition a little bit to renter's insurance. Spent a good chunk of time talking about homeowners insurance because, it is the most expensive investment that many Kansans will make. So I wanted to make sure that I touched on on that in greater detail. But renter's insurance, you still have a lot of the same considerations as you look through the policies. Next to auto insurance, which is required, renter's insurance is, I think, one of the best products that you can get for the money. It's typically going to range between $9 and $18 a month, depending on where you live, depending on if you get multi-line discounts. So if it's packaged with your auto insurance, for example. And this is often the most overlooked by consumers. And again, I understand budgets are tight. Everybody's wanting to make sure that they are watching every dollar and that they're stretching it as far as they can. But the biggest misconception that I see happen is that renters think that their landlord has coverage on the property and so they're good to go. The landlord will often have coverage on the property, the structure itself, but they're not going to have coverage on any of your personal items. They're not going to have coverage in many cases if you happen to be, cooking and watching the Chiefs game and get distracted by a touchdown or an interception, and then your rag that you were cooking with catches the stove on fire and burns up a kitchen. And that a kitchen renovation, even in a studio apartment, by the time you pay labor and all of that, you're looking at $10,000 plus that you could be personally responsible for if you don't have renter's insurance. And so it's important to understand that what your liabilities are as a renter and what your policy will or won't cover. So even a lot of renters' policies will have a minimum of, say, $100,000 in personal liability protection, but they often put caps on certain types of events. And so you want to understand what those caps are. You want to understand what your deductible is. And the common things you want to think about are what happens if I catch my kitchen on fire. What happens if, and believe it or not, this occurs every single winter, where, if you're renting a house and you connect the garden hose and you forget to disconnect it and then it causes a pipe inside the wall to break, that's not going to be a responsibility of the landlord, because they didn't do that. That would have been the cause of the renter. And so those are the sorts of things that can take place just from a property damage standpoint that could put you in significant financial peril if you don't have those covered. Add into that, whether you rent or own your home, as I've discussed earlier, if somebody breaks in and steals all your stuff, you're going to need a way to pay for that. Most of us don't have a bunch of money laying around just to go out to the store and replace everything that was stolen. So same as I said earlier, you want to make sure that you have either a home inventory app or take photos and write everything down and put that in a safe area that's locked and able to be recovered in the event of a peril of some sort. Because just the same on the homeowner side, if you tell an insurance company that, hey, I had this family ring that's worth $10,000, or maybe it's worth $10,000 to you, but the market says it's only worth $500. You want to make sure that you have documentation of the value. You want to make sure that you have documentation of the item in your possession. Obviously, when folks break in, they're generally looking for quick grabs. So, electronics, phones, TVs, those are the sorts of things that you probably have a receipt for or could get a receipt, but it's a lot easier if you have an inventory app that shows make, model, serial number, and if you have date of purchase, that makes it even easier. But, the name of the game is to be able to prove that you have this item. And the easier you can make that, that process, the increased likelihood of being able to have your claim paid in a timely fashion. I did want to touch on a couple of other things here before we open it up for questions. We do have resources available on our website for every type of insurance you can purchase in Kansas. We have shopper's guides for auto, for home. We even have it for health, for life insurance. Today's presentation was focused solely on auto, home, and renters, but obviously we regulate health insurance products in the state of Kansas, life insurance products in the state of Kansas, and a whole host of products that most of us will probably never come across. But we have the ability to compare rates depending on what specific insurance product you're looking for, which kind of gives you a good idea of a starting point. Many folks don't know where to even start, what companies are out there. They maybe know their current carrier, but they're not even sure how to get a better deal. We do have comparison tools for that. We also have what we call our complaint index. So it's not just about what company offers you the best product, or in what company is the cheapest, or what company's ads you recognize the most. It's also about the totality of the process. And so we put together a complaint index that helps you kind of see what has been other Kansans' experience with carriers in Kansas based on the particular type of insurance product that you're looking for. We do have a dedicated consumer assistance division. So not only do we regulate the industry here in Kansas, but we have an entire division that if you have a problem with your insurance carrier, we have folks here who are subject matter experts within their respective areas who can help you with that claims process, help you answer questions you may have, and if you're having trouble getting your company to be responsive to you, to help expedite that process as well. There are some products or some insurance products that don't fall within our jurisdiction. I won't list all of them off. Here's what you need to know as a consumer. If you contact us and it's not something that falls within our jurisdiction. So for example, Medicaid is state run. It's insurance, but it's not ran under our department. If it falls outside of our jurisdiction, we will get you pointed in the right direction. Half the time, it seems like the biggest obstacle to helping Kansans get the services they need is they don't even know who to call or where to turn to. So you can always call us. If we don't have the answer or if we don't know the answer, we'll get you pointed in the right direction. Obviously, the great folks at HCCI can help with that. They help Kansans all the time, every day of the week, both from a budget standpoint and from understanding, resources. And then the great folks with Johnson County Library have been helpful as well in pointing you in the right direction. But keep in mind that we are here for you every day of the week to get you pointed in the right direction or to help you within our own department if it's a product within our jurisdiction. I think there are some helpful resources that'll be available through the notes. But if you have a pen and pad with you, really easy to remember: insurance.kansas.gov. That's our website. That's where from there you can get based on whatever particular line of insurance that you're interested in. We have all of that helpful information I mentioned a minute ago. Our phone number there, that's an 800 number specific to Kansas. Give us a call Monday through Friday, 8 to 5, and be happy to talk through any issue with you over the phone. Or if you want, you can also shoot us a quick email. KID is not kid as in a child, but is short for Kansas Insurance Department .commissioner at ks.gov. That'll come right to us. We get that routed to the right person within the department to make sure that we get your questions answered. And if you're still with us and haven't tuned out, congratulations, you made it. So thank you for following along here. Hopefully I provided some good information, and I'll be happy to take questions.
Well, awesome. First off, Lee, I really appreciate it. I know this isn't a normal week. Certainly, as we keep having football games flexed around, let's say, all these fun things. But yeah, I really appreciate you taking the time to just join us and kind of shine a light on, we know we need insurance. We don't always necessarily know what we need it for, how to insure ourselves and our families as best as, our situation warrants it. So thank you for all the way to the 400 level. Maybe we won't go that far. But we've received some great questions during Lee's presentation. As we move into the Q&A portion of the program, you all will be seeing some polling questions coming across your screen. If you could please take the time to answer those polls while Lee fields your questions, that would be much appreciated. Lee, you ready to take some questions?
Absolutely.
All right. So, especially as we get into auto insurance on the screen for this poll, our car insurance moved into a nice neighborhood that has a large high school a block away. We don't have kids in high school. How can we get our rate back down?
Dylan, you cut out there quite a bit. Can you repeat that? I'm sorry.
Sure, yeah, no problem. So the situation, our car insurance just went up after we moved into a nice neighborhood that has a large high school a block away. We don't have kids in high school. How can we get our rate back down?
So great question. It's not uncommon for us to get concerns about rates. I will tell you that when I first started here, I did not realize that there can be several thousand data points that go into how a rate is determined. What may, correlation doesn't necessarily equal causation. And so a couple of things I would say. One, in general, it's always advisable that if your rates went up, you have a couple of options. You can certainly reach out to your current carrier, current agent to try to better understand that. Oftentimes, rates go up because insurance is a risk pool. And so if there are more claims in the pool than they originally anticipated, that will cause rates to go up. So that they can keep that balance in place. Obviously, an insolvent carrier is unable to pay claims. So we're constantly reviewing for solvency and making sure that rates reflect adequately the risk. When we review rates, we do have to have either a statutory or regulatory reason or actuarial reason to not approve those rates. So basically what that means is we have to either be able to, by math, prove that their rates are unreasonable and excessive, or we have to be able to show a violation of state law or state regulation, which is oftentimes we're looking for as a company trying an end around towards unlawful discrimination. One of the easiest ways or best ways to try to get a better rate is to shop around. I know it can be difficult, especially if you have a great relationship with an agent. If you're working with an independent agent, they're able to shop companies to compare rates for you. If you're working with a captive agent, so quick couple of examples would be, say, State Farm or Farmers. Those would be captive. An agent can only sell for that particular company. That might involve a conversation related to what coverage you have currently and how you may be able to adjust that coverage to match your budget. And then the other thing is if you still feel like after all of that, that there's some sort of wrong basis for that rate, you can certainly contact us to try to better understand those rates. All of those rate filings are public, so we'll be able to try to answer specifically why a rate increase was approved. Again, keep in mind there can be multiple thousand data points that are used to get to that rate. So and it's risk factors that come into play, and that's why people with masters in statistics look at that stuff. But yeah, I hope that answers that question. Shopping around is always a good idea, and making sure that you're having a conversation about coverages and what you're getting for your money.
That's fantastic, and we're getting a lot of questions coming in, so we'll try to motor on as best we can. So, mirroring the polling question, I know you touched earlier on Kansas being a no-fault state, what that entails, but the questioner says, I had a minor car accident. My insurance card said, do not agree, you are at fault. So I didn't. Was that okay? Can you briefly walk through the follow-up process, information to get, and all that business, Lee?
Yep, that's a great question. Yeah, I mean, you never, it's not a bad idea if you can, record the conversation that's taking place at the scene of the accident. One of our own employees actually had a great example of where she was in an accident. The other driver was indeed at fault. He admitted he was at fault. But then when he contacted his own insurance company, said, "Oh no, they were at fault. They hit me, the whole 9 yards." And so, it's always a good idea to have at the scene of the accident, stick to the basics. Make sure you obviously contact the police. Make sure you get the other driver's information. If there's anybody around, you want to get witness contact information, ideally a statement, but hopefully the police departments are able to get those as well. And then contact your insurance agent. So that's usually who you're going to contact if you're in an accident, to let the company know that you were in an accident. And that's the time to have the conversation about what you view was how the accident happened. Very rarely are you going to run into a scenario where somebody says, "Oh yeah, this was blatantly my fault." Most of the time it really is an accident, and depending on perspective may change, how you view the events that led to that particular moment in time. So once you say, "I'm at fault," if there's a recording or anything like that, it's going to be pretty difficult to walk that back, which is why it's always a good idea to keep to just the facts of the situation as you know them. Because anybody that's been in an accident, and I could speak to this, your brain, I work here and I know all the things I'm supposed to do, but the minute you have that incident, your brain kind of freezes as a moment in time. And so you want to make sure that you don't say anything that will come back to be problematic for you, because you're kind of shaken up because of the incident.
Thank you very much. Okay, so you've mentioned shopping around, some resources to kind of explore different service providers and things of that nature. I'm trying to keep these questions general enough to satisfy some general questions that our other viewers might have.
Sure.
We'll get more into that in just a moment here. But for one, do the shopping guides you mentioned also work for Missouri residents? And we have kind of a related question. I've been with the same company for 10 years.
Your video got choppy again.
Okay. Well, bandwidth.
I got the first question. I think I got both parts. If not, jump back in here. So first question about will these guides work in Missouri? Missouri does put out their own guides. There are insurance is regulated on a state-by-state basis. So there are some things that would be unique in Missouri that maybe don't exist in Kansas, and vice versa. So I would recommend, if you're a resident of Missouri, first, thank you for joining and listening to me here in Kansas. I know that can be hard with our border war, but I would recommend hopping on Missouri's insurance website to see whatever your particular insurance is and how that fits within the state of Missouri's requirements. I think the second question was probably about loyalty to a company and rate related, maybe. Yeah. So
yes, sir, you got it.
Yeah. So we actually see this quite a bit, unfortunately, where a consumer will feel like, hey, I've been with a carrier for 30 years. That ought to count for something. And while that can count for something, again, at the end of the day, a carrier is looking at what does the math say my rates need to be to make sure that we can stay in business, stay solvent, and pay claims that happen. And so they have ways to build in discounts, but there are times where, and it's very difficult when, it's kind of like changing doctors in a way when your doctor retires. If you've been working with the same person for 20, 30 years, you now have to start all over again. And that can be a real barrier to wanting to shop around. But again, that gets into the weighting factors. We all have different priorities that we have to judge and balance based on our particular circumstances. And so, yeah, it's difficult, but if you're at that tipping point from a budget standpoint, I'm sure we all know more than one insurance agent. We all know more than one realtor. It seems like any community event you go to, there's like 50 of each of those, right? So, see, maybe even ask your agent, if you've got that kind of relationship with them, say, hey, I'd love to stay with you, but you can't get me better deals. You can only shop one company for me. I need to see if this is the best deal for me. And a good agent's going to say, hey, I understand that. I'm here to help you and your family make the best financial decisions. And if that's not with me, my friend X, may be a good fit for you. And most agents, in my experience, are professional enough and responsible enough to be able to help point you in the right direction if they can't meet your particular need.
Fantastic. Thank you. And again, we had some more kind of specific questions about certain, landlord versus tenant and getting really kind of granular in specific situations. So I went ahead and just flashed customer assistance. Obviously, if you have a relationship with your agent, be a good place to start, right? But some general consumer assistance. I went ahead and put that up on the board here as we kind of transition away to saying goodbye to everyone. So real quick, as we bring Marilyn and Marty back, any parting words for consumer assistance or specific questions where to direct people to, Lee?
Yeah. So again, I would always start with your agent. They're going to be the ones that know what products you currently have. Get into those sorts of discussions with your specific concerns. Even, as long as the hypothetical is reasonable, they can probably answer that. So start with your agent. If you have issues, whether that be with the agent or the carrier, we do have the consumer assistance division that Dylan mentioned. We do regulate the entire industry, which includes the individual agents. So, and it may not be you may not have a complaint. You may just have a question and not sure where to turn to. Give us a call. We'd much rather you ask us beforehand instead of making an assumption and having something devastating happen. It's a whole lot easier to get you pointed in the right direction preemptively than trying to undo a bad assumption. So our consumer assistance folks live to help make Kansas days a little better, and we have better days at that than others depending on the circumstance, but that's exactly what we're here for, is to help you get the answers you need.
Most excellent, and thank you again. I know we blazed through all of those questions that everybody had. They were fantastic. I wish we had more time, but this is what we get when we try to cram 2 hours worth of stuff in 1 hour, right? So Marty, you had some things you'd like to say to the people, right?
I sure do. Lee, thank you again. That was an awesome presentation full of great information. And Dylan, I thank you for your moderation. And thank you all for joining us today. Our next Money Mondays webinar is next Monday, October 26th from 6 to 7 p.m. And Ginger Elsperman with HCCI will present on understanding credit reports and scores. And future Money Mondays webinars will feature HCCI's certified counselors and invited guest speakers. Marilyn, can you tell us some of the topics we'll hear about from the HCCI counselors?
Sure, absolutely. Well, Ginger, one of our wonderful counselors, as you mentioned, October 26th will be about credit reports and credit building. That magical score that not everyone understands how we get that magical score, and sometimes you're sold that score when maybe you really just need to care more about the report itself if you're trying to do a cleanup. And then Rogers is going to talk about November 30th, all about budgeting. He is our budgeting king, if you will. He'll help you work through and teach you how to do paycheck to paycheck plans, prioritizing expenses, tracking your spending. All those things are involved in that. And then, of course, we have more classes coming in the early spring next year. And all of these topics can be found either on our website for Housing and Credit Counseling or hcci-ks.org, or on the Johnson County Library website as well. Now, I do want to remind you, just take another minute to remind you, to encourage you to take advantage of the free counseling sessions. You would call our organization and schedule your appointment as soon as you've got time available. And also, let's see, send you back again to the website where you can see all of the classes we have coming up. And then, importantly, I want to acknowledge one last time our sponsors for all this wonderful program, all of the Money Matters, our excellent relationship with the Johnson County Library, and then our financial support from the Office of the Insurance Department, and for the Securities Commission and the Office of the State Bank Commissioner. We absolutely couldn't do it without you.